Welcome back to NBZ Research. This is part 3, the final explainer of our complete based deep dive. Today, we finish strong.
Okay, let's dive in to the conclusion of our analysis. We're going to map the landscape using the analytical scale, observe recent momentum, weigh the specific risks, and synthesize our final verdict. Section 1. Competitors and market position. Looking at the current landscape, Based occupies a pretty uncrowded gap by combining perpetuals trading, prediction markets, and a real-world spending card all into one single ecosystem. And when we evaluate the competitors out there, they generally lack at least one of these core pillars. Take dYdX and GMX, for example. They're exceptional at perpetuals, which, are basically decentralized futures contracts that let you speculate on asset prices without expiration dates. But they don't have a consumer-facing product like a spending card, and there are absolutely no prediction markets there. Then you have Polymarket, which totally dominates the prediction space right now, but lacks a native trading engine for standard crypto assets. On the flip side, you've got your centralized finance, or CeFi platforms like Crypto.com or Revolut. Sure, they give you highly polished spending cards, but they operate entirely through centralized entities. There's no native on-chain liquidity or decentralized trading happening there. Based is essentially trying to bundle all these very distinct, decentralized features into a single consumer app.
A really core structural advantage for Based is its native integration with Hyperliquid's massive $4 trillion cumulative order book. This is crucial because it gives them institutional-grade liquidity from day one, something a standalone consumer app just can't easily replicate from scratch. By building on HyperEVM, which is the Ethereum virtual machine compatible layer of Hyperliquid, Based operates as way more than just a generic user interface. This EVM architecture lets developers deploy complex smart contracts natively, while tapping directly into the liquidity rails that already power a high-performance decentralized exchange. This integration is a huge competitive buffer. Most standalone consumer applications are forced to bootstrap their own trading depth and user bases completely independently. And honestly, that is a notoriously difficult and capital-intensive process.
Section 2. Recent news and updates. Let's trace the timeline of events to contextualize the current operational momentum behind the project. Looking at things chronologically, we see a very clear operational trajectory. The foundational product actually launched in June of 2025, operating live for nearly 8 months before they even secured major funding in February 2026. Following that raise, the native token hit its all-time high, or ATH, in April 2026. Shortly after that, the broader ecosystem got a huge boost when the underlying Hyperliquid token reached its own all-time high of $68 in May 2026, officially cracking the top 10 crypto assets by market capitalization. That created a significant ecosystem tailwind for Based, directly translating into broad exchange participation. Most recently, we observed a solid 24% price rally across multiple exchanges in mid-June 2026. That points to renewed market participation, despite previous macro pullbacks. The steady operational cadence between that initial app launch and these subsequent milestones really shows a continuous focus on infrastructure scaling.
And let's talk about that funding. The $11.5 million Series A round, led by Pantera Capital, is a major data point for institutional validation. What's analytically important here is the timeline. The application had already been operating live and processing actual user transactions for 8 months prior to this capital raise. That demonstrates an ability to actually build and deploy functional technology rather than just raising money on a conceptual white paper. Pantera Capital is one of the oldest crypto-native venture funds out there, and they typically require rigorous due diligence and hard evidence of product-market fit before leading a round. Supported by strategic backing from Coinbase Ventures, this institutional funding provides substantial structural validation, especially for a project currently trading at roughly a $20 million circulating market cap.
Section 3. Investment potential and risks. We need to strictly calculate the fundamental bullish signals against the immediate structural risks. The bullish case really relies on a combination of Tier 1 institutional validation and specific tokenomics. There is a hard 1 billion token supply cap, which structurally prevents infinite inflation. Right now, the project is operating at roughly an $83 million fully diluted valuation, or FDV. The FDV represents the total market cap if all 1 billion tokens were unlocked and circulating today. Compared to private venture rounds, this metric suggests the token might actually be fundamentally undervalued relative to its peer group. On top of that, the protocol integrates a strategic 7.5% token allocation for the Athena community. Athena runs a rapidly growing synthetic dollar protocol, and by aligning with them, Based integrates a decentralized stablecoin directly into its consumer ecosystem. This creates deep liquidity synergies and cross-pollinates their user bases. The foundational architecture here is incredibly robust.
But conversely, we absolutely cannot ignore the strict bearish facts. The asset is currently sitting in a massive 73% drawdown from its April all-time high. Technically speaking, it displays a broken price structure, characterized by a sustained pattern of lower highs and lower lows, which objectively indicates a clear loss of buyer momentum in the near term. A huge contributing factor to this hesitation is the supply distribution. An overwhelming 76% of the total token supply remains locked. Additionally, while the exchange footprint is fairly broad, including platforms like Coinbase, OKX, and Bybit, there's still no confirmed full spot listing on Binance, just a presence in their alpha airdrop program. We also have to factor in the very complex operational hazards of running a crypto-funded real-world debit card, which requires successfully navigating strict regulatory compliance across 160 different international jurisdictions.
Breaking down these specific risk vectors, that high-level supply unlock presents the most persistent fundamental threat. Over 40% of the total supply is locked up between early investors in the core team, and those vesting schedules are not fully transparent to the public. That opacity adds a real extra layer of risk for retail market participants. Following that, we have some medium-level but still highly critical dependencies. The dependency on Hyperliquid is absolute. If the underlying Hyperliquid infrastructure faces a protocol failure or a network halt, Based's core functionality just ceases entirely. The app can't seamlessly migrate to another blockchain without completely rebuilding its foundational product. Finally, both consumer adoption and regulatory constraints sit at that medium risk level, reflecting the strict capital controls and cross-border payment regulations the project must continuously navigate to stay operational.
Mapping out the competitive landscape, the risk surrounding consumer adoption underscores a really intense uphill battle. Building a decentralized application that successfully captures mass-market non-crypto native users, the Web 2 audience, is notoriously difficult. These traditional consumers expect seamless onboarding, instant settlement, and dedicated customer support, completely free from the complexities of private key management or network gas fees. Based is attempting to bridge this gap, but it's going head-to-head with multi-billion-dollar centralized entities like Robinhood and Crypto.com. These legacy CeFi platforms possess vastly superior marketing budgets, streamlined internal compliance departments, and tens of millions of existing active users. Capturing market share from these established giants is going to require a flawless user experience and highly aggressive user acquisition strategies.
Section 4. The final research verdict. Bringing all of this data together, let's synthesize these facts into our final, objective research conclusion. The core thesis of our verdict is that Based possesses a structurally robust foundation, offering genuine real-world utility across an expansive network of 160 countries and 70 million merchants globally. The ability to spend crypto balances seamlessly at traditional point-of-sale systems bridges a significant operational gap in the current ecosystem. However, its ultimate success hinges entirely on outcompeting well-capitalized consumer platforms like Revolut and Robinhood. Analytically speaking, it's actually highly uncommon to identify a token with a fully diluted valuation under $100 million that also boasts a fully live product, genuine real-world spending utility, and lead backing from Tier 1 entities like Pantera Capital and Coinbase Ventures. The fundamental building blocks are undeniably present. Ultimately, execution is the deciding metric here. The defining question is whether everyday users will actually choose this on-chain ecosystem over traditional neobanks over the next 12 to 24 months, especially considering that 76% locked supply overhang. The technology is functional, the liquidity is institutional grade, and the problem of frictionless crypto spending is very real. However, reversing a 73% price drawdown in the face of massive upcoming token unlocks is a steep fundamental hurdle. As new tokens unlock and enter circulation, market demand and buying pressure are going to have to aggressively outpace that new supply just to keep the token price flat, let alone push it into a recovery trend. That requires sustained, verifiable, and massive user adoption that is simply unseen in the sector right now. So it remains a calculated, high-risk proposition.
And that is the complete Based deep dive by NBZ Research. 3 explainers, full coverage, no hype. If you made it through the whole series, you now have one of the most complete pictures of Based available anywhere. Don't forget to like this explainer, drop a comment with your thoughts, and subscribe to NBZ Research for more no-hype crypto deep dives. Check the description for the full written research report. This is NBZ Research. See you in the next one. Educational and informational only, not financial advice.